Welcome back. You're tuned into Editor's Roundtable. Well, the markets have moved in that vicinity of close to around 2,000 points in the last 6 months or so. Now, from the highs, we have seen a big correction, but from the lows as well, we have bounced up close to around 1,000 points. Now, we're bang in the middle of that particular range. The big point is, have the markets bottomed out? Just looking at past instances, and looking at a couple of strategy reports from the likes of Nuvoma as well that came out, and they have highlighted a few factors, a few parameters that have taken place in the past and how the markets have behaved. Let's focus on the parameters. Now, we're not suggesting that we go to those panic lows, but 4 key parameters is what we're looking at when the markets have bottomed out. One is on the valuation aspect. Now, the current PE is close to around 18 times, which is more or less in line with what we've seen on averages, a little bit higher actually. But in the past, we've seen the PE move even to around 13 times odd. So that's one factor. The other one is the market cap to GDP. Well, at the highs, it was around 120% odd. Now, that's come down to around 92% or thereabouts. But in the past, it's gone to as low as around 70%. Next up, earnings downgrades. Everyone's bracing for it, but not too many have tweaked their FY24 and FY25 earnings as well. So as of now, if you look for the past year, well, earnings estimates have been trimmed by around 5%. But in the past, before the markets bottomed out, you've seen corrections of around 10 to around 15% on the Nifty EPS as well. Next up, we're focusing on the bond yields as well. So the US bond yields have cooled off from the highs that we saw in October 2022. They've cooled off by around 75 basis points odd. But past instances have indicated that sometimes the US bond yields have cooled off by around 200 to around 300 basis points before the markets have bottomed out. Not just that, we look at the Nifty earnings yield. That's at around 5.5 to around 6%. You take the difference between the Nifty earnings yield as well as the US bond yields. And that's in the vicinity of around 250 basis points. But in past instances, it's gone as wide as around 600 to around 700 basis points. How does that happen? The Nifty earnings yield can move up, or in fact, you'll have the US bond yields that will cool off. So let's see whether or not we see some expansion on the difference between both these two parameters. And finally, we're bracing for central banks to go ahead and cut rates. But I'll tell you what, ECB, they just hiked interest rates last month, and we are bracing still for the Fed to increase interest rates by around 25 basis points odd. And past instances indicate that once the Fed goes and starts that rate cutting cycle, it takes a while for the markets to react positively, because initially the past instances indicate that equity markets actually correct first, and then in fact they do recover. So just to conclude then, well, the key milestones for the market bottom, well, there's still some distance away. It appears that we're in for a phase of a time-wise correction, and maybe the upside could be capped as well, but there'll be plenty of opportunities from the broader markets as we've seen in the past few weeks. Well, Pankaj is with us. Pankaj, I just thought I'll put out this piece with interesting strategy reports as well that I was reading. What's your view? Bottom in place or still more downside to go? And for sure, I think you'll be in the camp that there are plenty of opportunities as well. Next 6 to around 9 months, maybe it's the best time to shop.
Absolutely, Nigel. I think you have put it in a great way. I think 18 months have gone by where markets have made no returns. We had been cautious for last almost 9 to 10 months. I think the level of cautiousness has started to come down. I think next 6 to 9 months will be a great opportunity and time to start increasing equity allocation at some point of time. And I think during this period, the noise level will be the highest. As you will see disappointment on earnings, you will see disappointment on money supply growth, liquidity. And I think that will be the best time, and markets will provide great opportunities from a bottom-up perspective. So what we are doing as a team is working overtime and making sure that we have our shopping list ready. Wherever we believe that it's more on a structural story from medium to long term, I think next 6 to 9 months will be an exciting period. And I think this is a year to invest and reap benefits in 24 and 25.
Okay, all right, Pankaj. Well, I'm going to take, what's going to stay with me is the fact that you said the next 6 months are going to be exciting for the markets. I'm sure the bulls are going to take that with both hands. But thanks a lot for joining in, and you have a great weekend, and you folks have a great weekend too. There are lots of exciting things coming up this weekend, right?
Buying some gold over the weekend.
On Akshay Tritiya. Okay, that's good. And what about anything else?
I'll be watching this series, Garmi. I think I've heard really good reviews about it.
Okay.
And I think
is it about the weather in Mumbai?
No, it's not. It's about politics, and I think it's going to be fascinating. And I think I'll watch it.
I'm going to be watching Jubilee. I heard there are really good reviews about Jubilee as well. So, what about you, Nimish?
No
plans as usual.
Just take it easy. Yeah.
Okay, we know that no plans is a great plan to have, especially on weekends. All right, guys. With that, it's a wrap. Thanks a lot for watching.